One of the best indicators that generated a lot of money for me in the past 5 years is the RSI indicator. It's a classic indicator that measures overbought and oversold levels on any instrument. When you combine this indicator with a mean reversion instrument, usually you get great results. I have featured many videos on the channel that exploits the RSI strength to build mean reversion strategies on the S&P 500 index to a great success. Today, I will introduce to you another variation of the RSI indicator. This one is called Cyclical RSI. This indicator is based on the book, The Hidden Market Rhythm. The indicator is not just a tweak of the RSI, it's a totally new idea to build the RSI indicator. In this chart, I have the classic RSI indicator in the middle, and at the bottom, I have the new Cyclic RSI indicator. With the classic RSI indicator, we have fixed levels for the overbought and oversold. So for example, here you see we have 75 for the overbought and 25 for the oversold. With the Cyclic RSI indicator, the indicator uses market cycle to dynamically adjust the overbought and oversold levels. So as you can see here, the upper overbought level is changing all the time depending on the market cycle. Also, the lower channel, which is the oversold, again, it's adjusted dynamically depending on the market cycle. Now, why new indicator matters? For me, the main thing is they produce a different equity curve. So when you are building a portfolio, you want very low correlation in the strategies that are components of the bigger portfolio. So the lower the correlation, the better the performance of the portfolio. So by the time you introduce filters to the indicator, you get brand new equity curve that has nothing to do with the original equity curve, even though it's using the same style, in this case, mean reversion trading, even though if it's traded on the same instrument, same time frame. Now, the author in the book used the indicator in a different way. So basically, he measured the cycle every day before the trading session starts, adjust the parameters, trade on that day based on those parameters. Now, I do it differently because I usually adjust the parameters of the indicator and find a stable area, and then take those parameters as entry and exit signals, add a filter, and then I have a stable strategy. Also in the book, the author produced the code for TradingView and MetaTrader. And since I trade on MultiCharts and TradeStation, so I coded the indicator in easy language, and I'm going to use that version to produce the signals. So here we are in MultiCharts, and this is the S&P 500 day session represented by futures. And here we have the RSI2, the classic RSI2. At the bottom here, we have the Cyclic RSI indicator. Now, I did two of them because I want you to see the difference when we adjust the parameters. The Cyclic RSI has three parameters: the dominant cycle, vibration, and leveling. Now, I'm not going to go into details what each one of these is doing and how it's calculating, but we just want to see the effect of each variable on the indicator. So for example, the dominant cycle, if I take this down to 10, that's half the initial value, we can see now the signal is happening earlier. So you see the signal happened here. When we switch to 10, the signal happened earlier here. And in this case, the signal happened maybe 1 bar ahead. In this case, the signal didn't happen here and it happened here. So reducing the dominant cycle number gave us more signals. And I expect to have less signals if we increase it. So switching it to 30, as expected, we have less signals. So you see this one did not trigger, this one is triggered. This one did not trigger, this one is triggered. So let's go back to 20. And now let's change the vibration to half, which is 5. And again, now we are getting a earlier signals. So this one switched here, and the overbought switched here, and this one didn't switch, and here we have another one. So again, it looks like reducing this produce more signals. And then what if we go to 20 again, which is double, I expect less signals, and as expected, it is less signals. And finally, the third one, so it's 10, let's go to 5. So this one, it looks like the opposite. So you see here, this signal did not trigger here, and we have it here. And it's also barely triggered here, and here it's triggered. So this one looks to work on the opposite. So let's go to 20, and we should see more signals. And as expected, yes. So we are seeing more signals with this. So from the 3 parameters, reducing this produce more signals, reducing this produce more signals, and increasing this producing more signals. Now, of course, the book goes into details why each parameter is important and how to measure the dominant cycle. But like I mentioned, we are only interested to produce a different equity curve than the original RSI indicator. So here is the optimization for the strategy. We will buy when the RSI cross below the lower channel, and we will exit when it is above the upper channel. And we will optimize the 3 parameters. Remember, lower in the dominant cycle and vibration produce more signal, and higher in the leveling produce more signals. So I'm going to optimize 4 to 40 step 2, 4 to 40 step 2, and 10 to 30 step 5. All in all, we have 1805 combinations. And here are the results sorted by return to drawdown ratio. So the indicator, as expected, producing really good results on the S&P 500. You should know this already from watching many of my videos on the channel, that the S&P 500 works really well with long mean reversion strategies. And in this case, this indicator is no different. Now, we can sort by return to drawdown. We can see we are making about 200,000 in this one. Average trade, we have 1,700. And percent profitable, we have 78. So all in all, we have many great strategies to pick from. So I picked this strategy. It's making 183,000, 4.9 return to drawdown ratio, about 300 trades, 70% win rate with a great average trade above $600. And this is the annual period analysis. Like I mentioned, these results are not important because I can achieve these results with many other indicators. The point is to get a different equity curve. And I'm going to show you how that works. So here I loaded 5 strategies. Strategy number 1 is the classic RSI2 strategy. So this is the one classic RSI2 strategy. And then I have 4 variations of this cyclical RSI indicator. I'm not using filters. I'm just changing the values. And you can see, even though it's the same indicator, same instrument, we get totally different correlations based on those values. So look at this. This is 0.58 correlation, 0.88, 0.63, 0.67. So yes, these are high correlation, but remember, there is no filter here. So we already diversified before introducing a filter, which will diversify even more. So that's what we are looking for when we introduce a new indicator. To learn more about RSI, watch this video and I will see you there.